Hi there. So another week at Nifty. I'm Sharad. I along with an analyst Aman. We study the Nifty every week, and then based upon our studies, we take some positions and we actually share our learnings and our understanding on this particular channel. So, and we're not registered with SEBI or have any other agenda at this point in time. So, how was Nifty during this week? It's consolidated its position to stay up about 22,500 to close at 22,514, 0.84% up week on week. But if you really look at the number of advances versus declines, 22 advances and 28 declines. So breadth is slightly negative, and even if you look at the numbers from a perspective of investments coming from financial institutions, FIs sold for more than 3,835 CR, and DIs were also net not net buyers. Effectively speaking, very less money infused in this week into Nifty. So probably Nifty will remain range bound because there are also jitters or anxiety about elections as it builds up. Now, in what was very special during this week was to a certain extent the up moves shown by HDFC Bank, because that has been always the laggard in the last few months, or for that matter few years at this point in time. So primarily whatever you're seeing over here as an uptrend of 0.84%, a lot of it is coming in because of HDFC. So hopefully the elephant has again started moving and we'll see an uptrend being maintained because of that. Now, in terms of the industries which did well during this week, media up by 6%, metals up by 5.5%. So finally, media is coming back uh, uh, into the limelight. It's out of the woods because of the Z Sony call off. So it is good to see it back up by 6%, but primarily it's just a recovery for that matter. Metals showing strength because it's the second week of consistent progress. FMCG down by 0.04%. So effectively speaking, for most part, the market was very range bound. Nothing major at this point in time in this week that we saw. Like every week, this week also we have picked up a quote, and this time it is again from Warren Buffett, and he's very true. You know, the best investment you can make is an investment in yourself. The more you learn, the more you will earn. Now, the key point over here is that the more you learn, the more you will earn. So, what I see it from a perspective of financial learning, you should be very comfortable with numbers and you should be seeing the numbers if you want to make an investment, and don't look at it as numbers as from the charts, but look at it from a macroeconomic perspective, look at it from the strength perspective, and then be able to make decisions. So that's exactly what we try to do in this particular channel. So that's what we intend to continuously do. Now, what is the primary news this week from a macroeconomic perspective? Number one, what we saw was Tata Steel has been one of the highly recommended stocks over the last few months, and what we are now also seeing is that the uh, production from this particular company has started increasing, and that is going to add to its overall capacity to generate profit. So this week that news came out, up by 4% on year. The other thing which happened, which has been the talk of the town in this world, is always all the financial influencers who have come over the past few years, and they've started selling options trading to the newbies. SEBI has taken a very strong view on it. Earlier it was PR Sundar who was banned, and now it is somebody by Bap of Chart who used to sell options trading, and he's been fined of more than 17 crores, which he made through the selling courses and all. So he's SEBI has banned that influencer. And what is also very interesting at this point, another very important news from a macroeconomic perspective for that matter, is that central banks continue to accumulate gold. And if you really look at the gold price during the March and April months, it has been at it has really appreciated in between March and April. I think put together, gold has appreciated by 10%, which is rarely seen. So central banks continue to invest. And the other thing that is upcoming now is that the IT results are expected, with TCS scheduled to declare results on 12th April. So the result season is on, and all the companies that we invest in, we cover their quarterly results, because as I mentioned, it's all about trying to understand the markets at a deeper level. So it's not just the weekly charts, monthly charts, or for that matter daily charts. What we cover over here is the chart reflecting the actual growth, and that's why every time the company that we are invested in or we have made recommendations with, we study their quarterly results. So when TCS declares the results, of course it impacts entire IT pack. We're going to study TCS and bring it to you on what is our take and what are the salient things that have been called out in that. Now, global news this week, for that matter, is that the Federal has indicated that there might be only one or two rate cuts this year in the US, because people have been expecting it from quite some time. This can impact the markets negatively, given that there is no clear indication of a rate cut that is coming in. And what we also studied during this week, and we are trying to identify if there is any pattern that is emerging on how the financial institutions are investing in India on a week-on-week basis, month-on-month basis. We couldn't find any clear trend and indication, but what we know is that certain months FIs invest more in debt, certain months FIs invest more in equity. There's no clear pattern whether it is directly impacting the equity markets or the Nifty or not. But what we know as a part of that study is also the fact that Nifty has gotten an investment of more than $4 billion in the last 5 years. And primarily, if I really look at it, it is one is the favorable investment climate in India and rapid urbanization. The other is that as much as we wish that the world becomes a global village, it is not today. And for that reason, India is still a better and a secure investment. So these are some of the markets in which people can hedge their bets. That's why you're seeing some North American, the US investments coming in over here in the financial markets. So let's hope that it continues and if the floodgates open, because one of the key things also there in the market is that a lot of investment which was earlier being made in China should get diverted to India. So far we haven't seen that diversion, but that should happen. So that's about FIs. Now what's expected from next week, what we believe is that Nifty will continue to be range bound, as we saw that the overall breadth of the market is not very positive. Although it is trading in the positive zones, but it's not very positive, with 22 advances and 28 declines. And small cap index also showing not so much of a recovery at this point in time. So it will remain range bound with elections anxiety also coming in place. The other recommendation that we have is that we've been talking about this stock, LIC Housing Finance. We are accumulating it as we had covered in one of our earlier segments, in which we had talked about rural housing finance and primarily it being funded by government. We continue to believe in this stock, and it's showing a lot of strength on weekly charts and daily charts. So we are accumulating it, and we recommend it to actually make some dips as this particular stock gives opportunity. We really quickly shift to the screener and see how it is doing. If you really look at it from a profitability perspective, as you can see over here, the net profit that's expected to be there trailing 12 months is showing a lot of strength. 2,891 was March 2023. For trailing 12 months, it's more than 4,869. Quarter on quarter also there is significant progress. If you look at it, if you compare it this year's 3 quarters versus previous 3 quarters, there is clear strength. Financing margins are pretty good at 22 to 25%. EPS has grown significantly over the last few cycles. So there is a lot of strength in this stock that we are seeing, primarily because of the, also there is a lot of support from the government in this particular segment. So our this thing would be to actually, if you look at the holding promoters, which is primarily LIC, has increased from 40 to 45 in the last 3 to 4 years, and that particular thing has gone from the public, and overall DIs and of FIs have a significant stake which is continuously there. So there is some amount of stake that moved from FIs to DIs, and significant amount moved from the public to promoters. And so good profits, and if you look at it from a peer segment perspective, from a PE perspective, still one of the most attractive ones. So we continue to build positions in this. It has shown recovery. It had gone down all the way to 575. We did take a little bit bets at that point in time, but now we still continue to invest in this. We recommend the same. So that's how this week was, and that's what we are recommending for this week. I'll see you in the next week, wherein we again cover the news and some of the very specific stocks. Bye for now. Stay invested with conviction using the numbers and macroeconomic news.